to the regulation of European social entrepreneurship funds module. Today we're going to have a look at, first we'll make an introduction, then we'll have a look at the regulation for the fund. What is a European Social Entrepreneurs Fund? Who does the European Social Entrepreneurs Fund apply to? When does the European Social Entrepreneurs Fund regulation apply? The conditions for the use of the designation of European Social Entrepreneurs Fund. So being a manager, who can invest, and the limited use of leverage. And finally, conduct of business rules, the benefits, and the conclusion. Let's start with the introduction. Increasingly, as investors also pursue social goals and are not only seeking financial returns, a social investment market has been emerging in the Union, comprising in part investment funds targeting social undertakings. Such investment funds provide funding to social undertakings that act as drivers of social change by offering innovative solutions to social problems, for example, by helping to tackle the social consequences of the financial crisis and by making a valuable contribution to meeting the objectives of the Europe 2020 strategy set out in the Commission communication of the 3rd of March 2010 entitled Europe 2020, a strategy for delivering smart, sustainable and inclusive growth. So social businesses combine a social, ethical, or environmental mission with the entrepreneurial flair and innovation of a business perspective. They can face some specific challenges in getting investments. The Commission announced in the Single Market Act works to explore how private investment funds might help so that investors and social businesses better reap the benefits of the single market. This includes ensuring there are no unintended barriers within European fund rules to the efficient channeling of investments to social businesses. So the regulation sets out a new European Social Entrepreneurship Fund label. So investors can easily identify funds that focus on investing in European social businesses. The approach is simple. Once the uniform requirements defined in the proposal are met, managers of social entrepreneurship funds will be able to use the new label and market their funds across the whole of Europe. Every fund using the label will have to prove that a high percentage of investments, 70% of the capital received from investors, are spent in supporting social businesses. Uniform rules on disclosure will ensure that investors get clear and effective information on these investments. So what is the European Social Entrepreneurs Fund? A European Social Entrepreneurs Fund is a collective investment undertaking. Intends to invest at least 70% of its aggregate capital contribution and uncalled committed capital in assets that are qualifying investments. Does not use more than 30% of its aggregate capital contributions and uncalled committed capital to acquire non-qualifying investments and is established in the European Union. And collective investment undertaking is a fund which raises capital from a number of investors with a view to investing it in accordance with a defined investment policy for the benefit of those investors and does not require authorization under the UCITS directive. A qualifying portfolio undertaking means an undertaking that at the time of an investment by the qualifying social entrepreneurship fund is not admitted to trading on a regulated market or a multilateral trading facility. Also, it has such characteristics as provision of services or goods to vulnerable or marginalized, disadvantaged or excluded personas, employment, a method of production of goods or services that embodies its social objective, or provision of financial support exclusively to social undertakings. Embracement of accountable and transparent way, in particular by involving workers, customers, and stakeholders affected by its business activities. Establishment within the territory of a member state or in a third country, provided that the third country. So a qualifying investment means equity or quasi-equity instruments that are issued by a qualifying portfolio undertaking and acquired directly by the qualifying social entrepreneurship fund from the qualifying portfolio undertaking. A qualifying portfolio undertaking in exchange for an equity security issued by the qualifying portfolio undertaking, or an undertaking in which the qualifying portfolio undertaking is a majority-owned subsidiary and which is acquired by the qualifying social entrepreneurship fund in exchange for an equity instrument issued by the qualifying portfolio undertaking. So this regulation lays down uniform requirements and conditions for managers of collective investment undertakings that wish to use the designation European Social Entrepreneurs Fund in relation to the marketing of qualifying social entrepreneurship funds in the Union, thereby contributing to the smooth functioning of the internal market. It also lays down uniform rules for the marketing of qualifying social entrepreneurship funds to eligible investors across the Union for the portfolio composition of qualifying social entrepreneurship funds, for the eligible investment instruments and techniques to be used by qualifying social entrepreneurship funds, as well as for the organisation, conduct and transparency of managers that market qualifying social entrepreneurship funds across the Union. So in summary, they apply. Who does the European Social Entrepreneurs Fund apply to? They apply to sub-threshold, for example, registered AIFMD, the Alternative Investment Fund Managers Directive, who meet the following criteria. They manage portfolios of European social enterprise funds, are established in the European Union, whose assets under management in total do not exceed the threshold referred to in point B of Article 3.2 of the Alternative Investment Fund Managers Directive. For example, it's a total AUM of less than 500 million euros, comprised of closed-ended and unleveraged funds, and are registered with the competent authorities of their home member state in accordance with point A of Article 3 of the AIFMD. So when does the European Social Entrepreneurs Fund regulation apply? The European Social Entrepreneurs Fund regulation came into force on July the 22nd, 2013. The conditions for the use of this designation of European Social Entrepreneurs Fund was given to being a manager who can invest, limited use of leverage, and conduct of business rules. So being a manager, managers of qualifying social entrepreneurship funds shall market the units and shares of the qualifying social entrepreneurship fund exclusively to investors which are considered to be professional clients in accordance with Section 1 of Annex 2 to Directive 2004/39/EC, or which may, on request, be treated as professional clients in accordance with Section 2 of Annex 2 to Directive 2004/39/EC, or to other investors that commit to invest the minimum of €100,000 and state in writing in a separate document from the contract that is concluded for the commitment to invest that they are aware of the risks associated with the envisaged commitment. Managers of qualifying social entrepreneurship funds shall identify and avoid conflicts of interest. Managers of qualifying social entrepreneurship funds shall identify in particular those conflicts of interest that may arise between managers of qualifying social entrepreneurship funds, persons who effectively conduct the business of those managers, employees of, or any person who directly or indirectly controls or is controlled by those managers and the qualifying social entrepreneurship fund managed by those managers or the investors therein. qualifying social entrepreneurship fund or the investors therein, and another qualifying social entrepreneurship fund managed by the same manager or the investors therein, qualifying social entrepreneurship fund or the investors therein, and a collective investment undertaking of UCITS managed by the same manager or the investors therein. Managers of a qualifying social entrepreneurship fund shall employ for each qualifying social entrepreneurship fund that they manage procedures to measure the extent to which the qualifying portfolio undertakings in which the qualifying social entrepreneurship fund invests achieve the positive social impact to which they are committed. Managers must also ensure that these procedures are clear and transparent and include indicators that may, depending on the social objective and nature of the qualifying portfolio undertaking, include subjects such as employment and labour markets, standards and rights related to job quality, social inclusion and protection of particular groups, equal treatment opportunities, non-discrimination, public health and safety, and access to the social protection and educational systems. European Social Entrepreneurs Fund regulation also provides that the managers shall either be an external manager, which is the legal person appointed by the European Social Entrepreneurs Fund, or on behalf of the European Social Entrepreneurs Fund, and which through this appointment is responsible for managing the European Social Entrepreneurs Fund, or European Social Entrepreneurs Fund itself, which shall then be registered as manager where the legal form of the European Social Entrepreneurs Fund permits an internal manager and where the AIF's governing body chooses not to appoint an external manager. An internally managed European Social Entrepreneurs Fund cannot be appointed as the external manager or another European Social Entrepreneurs Fund. Managers of qualifying social entrepreneurship funds shall make available an annual report to the competent authority of the home member state for each qualifying social entrepreneurship fund that they manage by 6 months following the end of the financial year. The report shall describe the composition of the portfolio of this qualifying social entrepreneurship fund and the activities of the previous year. It shall also disclose the profits earned by the qualifying social entrepreneurship fund at the end of its life, and where applicable, the profits distributed during its life. It must contain the audited financial accounts for the qualifying social entrepreneurship fund and be produced in accordance with existing reporting standards and the terms agreed between the managers of qualifying social entrepreneurship funds and the investors. Managers should provide the report to investors on request. Moreover, they may agree on additional disclosures to each other. The annual report shall at least include the following: details as appropriate of the overall social outcomes achieved by the investment policy and the method used to measure those outcomes, a description of whether investments in relation to the other assets of the qualifying social entrepreneurship fund, which are not invested into qualifying portfolio undertakings, occurred on the basis of the criteria. A summary of the activities that the manager of a qualifying social entrepreneurship fund has undertaken in relation to the qualifying portfolio undertakings as referred to. Information on the nature and purpose of the investments other than qualifying investments referred to in Article 5.1. An audit of the qualifying social entrepreneurship fund shall be conducted at least annually. The audit shall confirm that money and assets are held in the name of the qualifying social entrepreneurship fund and that the manager of a qualifying social entrepreneurship fund has established and maintained adequate records and checks in respect of the use of any mandate or control of the money and assets of the qualifying social entrepreneurship fund and the investors therein. So who can invest? European social entrepreneurs funds may only be marketed to investors who have the experience, knowledge, and expertise to make their own investment decisions and properly assess the risks associated with such investments. Therefore, European social entrepreneurs funds may only be sold to investors who are or elect to be treated as professional clients, are willing to invest at least €100,000, have confirmed in writing that they are aware of the risks associated with their investment, These restrictions do not apply to investments made by executives, directors, or employees involved in the management of a manager of a European social entrepreneurs fund when they're investing in a European social entrepreneurs fund that they manage. A professional investor is any investor that is considered to be a professional client or may be treated as a professional client on request within the meaning of Annex 2 of Directive 2004/39/EC. Limited use of leverage. In order to ensure that the European social entrepreneurs funds do not contribute to the development of systemic risks and that such funds concentrate in their investment activities on supporting qualifying portfolio undertakings, the loose use of leverage at the level of fund is limited. Managers of European social entrepreneurs funds may not leverage the European social entrepreneurs fund using any method by which the exposure of the fund will be increased beyond the level of its commitment capital, whether through borrowing of cash or securities, the engagement into derivative positions, or by any other means. Borrow, issue debt obligations, or provide guarantees at the level of the European social entrepreneurs funds, where such borrowings, debt obligations, or guarantees are covered by uncalled commitments. So the conduct of business rules. The managers of European social entrepreneurs funds must meet the following criteria in relation to the conduct of business and the relationship of those managers with their investors. They must act honestly, fairly, and with due skill, care, and diligence, have appropriate systems and controls in place to prevent malpractice that can reasonably be expected to affect the interest of investors, conduct their business activities in a way that promotes best interest of the funds they manage, their investors, and the integrity of the market, have adequate knowledge and understanding of the undertakings in which they invest, treat their investors fairly. They must ensure that no investor obtains preferential treatment unless that treatment is disclosed in the rules or instruments of incorporation of the fund. Not delegate functions to third parties to such an extent that it becomes a mere letterbox entity. Identify and, wherever possible, avoid conflicts of interest. Where this is not possible, disclose conflicts of interest appropriately to prevent them adversely affecting the fund and investors' interests. They have sufficient own funds and use adequate and appropriate technical and human resources as necessary for the proper management of the funds it manages, and give their regulators and investors prescribed information at regular intervals. So, is registration obligatory? And what are the benefits of registration as a manager for the European Social Entrepreneurs Fund? If a manager and its funds are registered, the manager will be entitled to use the European Social Entrepreneurs Fund label for its European Social Entrepreneurs Funds. This label will entitle the managers to sell such funds across the EU by way of a marketing passport, thereby avoiding the patchwork of uncertainty of private placement regimes across the EU. Registration as a manager of a European Social Entrepreneurs Fund is an entitlement, but is not an obligation. If you're a sub-threshold manager marketing your funds in the EU and the investment policy of your funds is compatible with the requirements of the European Social Entrepreneurs Fund regulation, then you will be missing out on an opportunity to greatly simplify the distribution of your funds while also remaining subject to the registration criteria under AIFMD. So the final provisions and the conclusion. By the 22nd of July 2017, the Commission shall start a review of the interaction between this regulation and other rules on collective investment undertakings and their managers, in particular those laid down in the Directive 2011/61/EU. This report is addressing the scope of this regulation. If a manager manages funds that invest in qualifying portfolio undertakings and meets the requirements of Article 3 of the AIFMD, then the opportunity to avail of a marketing passport will be very attractive. as it will not add appreciably to the light touch regulatory burden already imposed on that manager, who would in any case be a registered manager under AIFMD. These regulations support EU steps to develop a coordinated and coherent EU framework for investment funds targeting social businesses. However, the lack of trust and confidence in social investment propositions holds back the development of funds supporting social businesses, while poorly developed fund regimes and inefficiencies in cross-border access to investors are hindering growth. To succeed, such funds must be predominantly invested in social businesses and provide clear and effective disclosures, including on social performance. By acting now, Commission can aid the growth of the social business sector, stimulate and broaden investment choices across the EU, and deepen the pools of capital that funds that invest in social business can tap into. This will contribute to the European Union that makes a strong commitment to social entrepreneurs and the smart, inclusive, and sustainable growth they bring. So thanks for your attention and happy learning.